The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Currently, we have the S&P up 12 points on the day. It is struggling. It is trying to hold on to those gains. Looking on over at the Russell, it's currently up 4 points on the day. Nasdaq's up 22, but the Dow is still pulling the triple digits up 103 points on the day. We got oil currently down 17 cents with natural gas up 0.75%. I can say 0.026, but that doesn't make a whole lot of sense, so it's easier to say the percentages on natural gas. Looking on over at corn, it's down a couple points on the day. And we got soybeans down 6 points on the day, both down about 0.5% right now. Euro dollar is down 72 pips. And Aussie dollar's up 43. Pound dollar really trying to lead the way between the major dollar currencies right there. And it is down 100 pips exactly on the day. We got U.S. CAD down 42 pips. U.S. franc is up 51 with the euro yen down $1.01, down 101 pips. Pound yen down 146 pips with the U.S. yen down just 20. We're going over at gold. Gold is currently down 45 points. Have you checked the gold contracts today? They are moving. So if you haven't been watching gold, man, it's just, that's been the money all day. Checking that out. We'll go back. We'll look at that and see, was that possible to trade that? How could you have done it? Looking over at silver, it is currently down 4.3%. 4.3% move on silver. This basically overshadowing gold in the entire process. Copper, it's the weak metal. It's only down to 1% right now. The other ones, they are just, those bears, when they say the bulls go up the stairs and the bears go out the window, that's what they're talking about. 4% drops in a single day. And we get more than that some days on gold, right? We get like 100, 150 points. So this is almost a light day compared to some of the big days. It's like a second-story drop versus a skyscraper drop like we got a couple weeks ago. And anyway, so that's our major market wrap summary on the day right now. Let's go ahead and check out what news, which there hasn't been much, but what news we have had. We had Draghi doing his usual little, President Draghi doing a little speech over in the ECB. He came on at 3:48 a.m. He wanted to make it, unique, so we did it at 3:48 a.m. And it was a surprise. So it sort of just came out of nowhere. He spoke at the National Assembly in Paris. We didn't really have the exact time. Popped up. Let's go ahead and pull up the euro dollar, and let's see what it did when he talked and how the market responded. So right over here, let me grab one other chart. I want to bring that onto the screen for you. There we go. Oh, yeah, there's our gold. Sorry about that one up, but it's already down 2 deviations on the day. And it just might want to hit 3. We'll see. But it doesn't have a lot of time left. We got like 20 minutes, and the gold pit closes. So, barring any kind of major, post pit closing announcement, like when FOMC comes out, obviously that can affect gold. Even after the pit closes, it'll just keep moving pretty hard electronically. Usually you don't get a whole lot of movement after that pit close. Look at yesterday. It's flat. But today, not so flat. And it started, just a rapid descent. Right there, you can see the move right there at 2100 hours. So, 9 o'clock at night? So it decided to just start moving. And that was based on, let's see here. I'll pull up some stuff. I'll give you some more details about what started the move. But anyway, so it moved at, kept going, moved down half a deviation, 0.7, hung out there for about an hour, and moved on down to the 1 deviation. Really stood at that level from about 10 o'clock until about 3 a.m. this morning, until Europe opened. Once Europe opened, we got that drop on down to 1.5, on down to 2. Then it did a nice little, swing trade for you, 1.5, 2 to 1.5, and then going on back down to 2. Probably going to close right around 1226.9 on the day would be my expectation. And we can look at, the different ways that you can trade this. There's a lot of ways to trade it. And let's see here. One of the things I like to show people is sort of how to use the deviation levels whenever they're doing these trades. So, like I said, there's more than one way to use them, but I like to use them more for trailing stops than anything else. And so I'll put them in. If I think the market's going to keep going, I can check it out. But what I do is, let's say you were short last night. Let's just say you were lucky and you got that, okay? Then when you were trailing this stop all the way down, well, what you do is, of course, you trail the stop when it closes below a deviation level. And then it closes below the 0.5 right here, right? So you got that. And 0.7 closes right there. Closes back above it, then back below it, okay? Then, so we trail our stop again right here. At least 5 ticks above. You don't have to break that 5-tick high. Closes on below it again, so that gives us a little more. And then it closes below the 1 deviation down here. If you get a deviation for a day, you're a happy camper, okay? So that's a great move to catch, just the 1. Now, if you get the 2, 3, 4, 5 sometimes on gold, then that's just fantastic. But if you just get 1, look at that right there. 1251, 1275. That's a 24-point difference. That's $2,400 on a gold contract. So nothing to complain about right there. And you could have traded this, by the way, on Nadex. Okay, so you could have hopped on Nadex. You could have placed this trade, and you could have rode the move down. And so we can see this moving on down there, and then it comes up, and then let's see, does it get stopped? Let's look at the details. Right here, we got a high 1253.2. If we put it 5 ticks above, has to break it. So 1253.7.8. I think we do. We do break it. We get hit. What do we expect when we get hit on the deviation? We expect flat or reversal, basically, but we expect choppy. We got choppy. Now, things can always change when Europe opens, so this is a little bit different overnight. A lot of times these are happening during the day, right? So Europe opens up again, and the trend continues. That is something we often expect unless we see something to the contrary. And Draghi came out. He made his little speech at 3:48. And when does oil continue its descent? Oh, right at 3:48. So he came on out, and there wasn't just a whole lot right there. But he came on out, had his little speech, and oil's like, you know what? I'm not done. I'm going to go ahead and drop another 24 points for you. And it moves on down to a little, 1224, 1223 right there before stopping. So if you went in and you caught this after that announcement came out, it kept going. You said, okay, European session's open. It's moving back down. So you're going short there. Maybe you hopped in a little bit late. You hopped in right here. Okay, so after the pullback, I like to get those pullbacks and then sell when it breaks the low. But you definitely would have had, your stop at least up here. And then you would have moved your stop down when it closes below. Okay, that's the rule, right? Closes below, comes on down, comes on down, comes on down, and finally closes below again. So right here, move that stop again. And so that would have then got hit, and then what happens? We expect choppy or a slight reversal. We got a little reversal, and then it sort of turned back into chop as it moved on back down. And so it could be a good time when that gets hit to look at a potential, reversal trade or a butterfly trade. Rarely are you going to just hop right back in, especially at the 1 deviation mark. The only reason I would consider this as a trade that you might want to continue after the stop was hit was because it was in chop for so long, and then it happened at night. So we have that continuation happening at the European session. So that would be the one thing that might lead to the ongoing trend continuation. You get it hit again after another deviation move, it's pretty much done for the day. It's going to be hard to trade that this morning because the move was done. You could have went in for the reversal if you wanted to, but the move was over. It was toast. So nothing that I really, would want to personally keep trading after that point. And it is important when you hop in. Sometimes we get so caught up. We log on to our screens in the morning, and we're looking at this, and we're trying to figure out what we're going to do. And really, we're not looking back and going, what has happened? What would I have done if I would have traded all night? Now, I know you don't trade all night, and I'm not saying that you need to go, oh, man, I missed out. I'm not talking about second-guessing and looking back. The whole idea that you're going to catch every trade is impossible. That's like trying to catch every fish in the ocean, all right? It's just not going to happen. And, there's always a market open somewhere in the world. 7 days a week there's a market's open, depending upon what countries you're trading in, what exchanges you're trading on. But the point is, what could you have done? well, I could have done this, and based on this, what would I be doing it now? And so I would have went short. Okay, maybe I would or would not have got in again, but if I did get in again, then where would my stops have been? Okay, now all of a sudden we come in. We got the gold opening session. Looks like it's starting to pull back. Okay, we're probably going to get chop or maybe a little bit of a move up. And but that's just, the trend sort of looks like it's toast. We've already moved 97% of the expected move. I'm going to be real careful about continuing to take shorts on that trade. So hopefully that, this opens your eyes a little bit. When we look at silver, I guess, we were going to go to euro, but we're on the metals. We might as well just wrap them up. Looking on over here at silver, we had a very similar, but it was only a one deviation move. There's a lot of implied volatility built into silver right now. Look at that. That is insanely massive. Man, it was expected. So this is about what the market expects for the market to do. I mean, if we look at implied volatility yesterday on silver, we had a 0.525, okay, basically deviation. We look at today, look at this. Wrong button. Let's look at today's single deviation move expectation on silver. 0.965. Twice the expectation. And look at that. Yesterday, we only had a 0.525, and look, it moved up to half a deviation, came on back down. I mean, that's all we got on silver. It was just a quiet day. And so the deviations, I mean, were they were just spot on. And you can see it hit that level and dropped. But today it said, hey, we should be moving down 0.965. And what did it do? I mean, it moved right down to the level. I mean, it's amazing. These things, you watch them each and every day. I watch them every day with the show, with the trading, and they continue literally to amaze me. And I don't just say it because I made them. I say it because, out of all the things I've made, these have this insane, consistent accuracy. Every trader I've talked to that's used them has said the same thing. And but on down there to 0.5, if we're doing the, you can do the whole trailing stop thing, whatever. But remember, the one that I'm most cautious about is that one deviation. When I get that stop hit, so right down here, that stop hit, I'm expecting chop to reversal. So I put it right there. It closes below, closes above, closes below again. I can tighten it again right here. Closes below, closes above, stops out. Okay, now I'm expecting choppiness, and that's what we got for the rest of the day. So oil was a little tough to, not oil, but silver was a little tough to trade this morning as well, just like gold was. Okay, so right there we had the moves on down. If you're following the trailing stops all the way down, if you were able to, like I said, be basically lucky and catch that short, then you would have followed it. And, it doesn't mean I catch every one of these, but I still want to know, how would I follow this trade so I know where should I be at now, what should I be looking at. Well, that stop gets hit. We do get choppiness from about, 11 o'clock, and it does a full pullback, potential re-entry around 1, but the real entry was when Europe opened, 3:30. Moved down, not near as much as gold moved on that second leg, but did move down onto the one deviation. But after the one deviation, it was toast. And that was, in the morning right before the pit opened up on silver. So hopefully you're starting to learn to use these things. Statistics are missing from almost every trader's arsenal. And you need to learn how to put this into your trading plan. Stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back to the Diagnostic Trading Hour. And, wow, you got to... It's always good to keep a little eye on what might exist out there in those last 2 minutes. You know, you never know what kind of trade a trader is going to place. And you might be able to hop in and take the other side of that trade. And so I just put on a trade right now. Somebody had a trade sitting there for $75, okay, to sell the 18.6. They were trying to buy it for 75. And I guess I don't know what they were doing. They were trying to buy it for $75. And so I saw the bid out there, and I'm like, wow, you're telling me I can sell this for $75, 18.6, and I have 10 seconds left to go, and the market's at 18.59? Yes, I will take that. Thank you. So that doesn't even make any sense, but I do greatly appreciate the donation. Basically, whenever you're selling a binary, okay, you're saying it will be at or below. When you're buying a binary, you're saying it will be at or above. So if that makes sense to you, it's a pretty simple concept, but at or below, at or above. So I'm looking at this thing, and we have like seconds. I mean, just, you know, literally seconds left. And somebody just has a buy order. They're like, you know, I want to buy the 18.6 for $75. I don't know what they're doing. I don't know if they're trying to take profit. I don't know if they don't know what they're doing, you know, but my job is, if I see an order, to fill that order, if I like it, right? And So the market was, 18.59, 5 seconds left to go. I can sell it for $75. By the way, that means I make $75 if it stays at or below 18.6. So my risk was $25 on the trade with 5 seconds of risk. And that was a crazy trade. But anyways, I'll keep looking. If anybody else wants to do some more of those, let me know. But yeah, just make sure you definitely cancel any working orders that you don't want working at the last minute, because the market maker or another trader will be happy to take them off of your hands. Okay. And let's see here. 1 second. We got gold. Gold's coming up right now. Let's pull up the gold contracts and see what we might be able to do. Okay, let's see. Gold. And once that loads up, we got 1230.1. 1230. Oh, these must be just old, stale quotes. Let's see here. I got the right contract up? Yeah. Okay, yeah, nothing floating right there right now. These are just stalled out quotes here. I was hoping, I was like, man, I'll take some more of those if I can get them. But we'll see what happens here in the last couple minutes. Maybe somebody will just throw something up. And let me grab that. And we got a 1229. That one might be live. Let's see here. Okay, so that one's not too bad. That's basically 7 points. We got 2 minutes left to break even. Grab that trade right now in that 81.50. And so on that trade, basically what's happening is so long as it expires above 1229 in the next couple minutes, that we have profit on the trade. So pretty sweet trade, pretty simple, easy trade that we can take advantage of, and be a $19 profit in just a few minutes. So really fast. You got to be ready for them, okay, to make them happen for you over there. And then one of the things you can do too is, let me show you this right here, is you can always look at these and just see if there's some just weird order just sitting out there that shouldn't be. Okay, like this is a 1250. Buy for 1250 at 48.50. That's a bad idea. Okay, it's down to 1229. I'm not taking any of these. There's a 96 and an 81 at 1229. I could buy saying it's going to be above 1229 for 96. That's a $96 risk for a $4 reward with a $1.80 fee. Probably not going to take that trade. Okay, I mean it's a couple of dollars that are free, and I guess you could do it in the last second if you want to just grab like $2 and move on. So, I mean, that would basically be the idea. You go in here and you go like, okay, I'll take those. And then, yeah, see, somebody already took them from me. Not fair. Shouldn't have showed you. All right, well, that was a free like $5 or $10. Anyways, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Let's see what other trades we can find right here. And make sure you know, how am I doing this? How am I finding these trades? Well, hop on over here, TFNN.com. You can check it on out, okay? TFNN.com. And you can go in and click on the Diagnostic Box Spread Analyzer right there. Get your access, 2-week free trial. Check it out. Not only do we have the Diagnostic Spread Analyzer, we now also have the Diagnostic Binary Analyzer. And we've been adding upgrades to it day after day after day, week after week after week. And if you'll just go in there, click on that, you get immediate access to it. You'll be able to walk right in and start using it immediately. And it's a very, very cool way to trade. I think my favorite way to trade out of all markets that exist is on Nadex. Now, we're about to have some 3 o'clock expirations come up. We can always find additional trades. And I'm just looking to see if I see anything that just really stands out that looks good, that I want to take advantage of. So, we can go in. I'm done with the metals, so I can uncheck those. You probably don't want every instrument selected, by the way. It'll take a long time to load. So choose an instrument or a group of instruments. You can look at them. We look at the indices right now. They're sort of ticking up a little bit. Look over at the Russell. Let's check out, see what we got going on in the Russell. And let's see. We got one in 24 minutes. It's a little bit more time than I usually like to give it, but it is coming on up. And let's see. Russell's moving a little bit. So you could do like 959.2 for 95. That's obviously not worth it. That's only $5. especially with this much time left till expiration. There's also an 83.50 that you can take advantage of. That's not too bad. That's down at 960.2. So you'd want to make sure, of course, you're looking at your charts, looking at your time and sells. And there's just quick, easy, premium collection. I'm probably not going to hop in yet on this trade. I mean, the one advantage of getting in now on the trade is, I mean, it's, it's a solid 1.5 away. But the Russell could easily move 1.5 in the next 30 minutes. So not really I don't want to do these $15 trades with only 30 minutes left to go. I want to do them with like 5 minutes left to go, or maybe 15 minutes left to go at the most. So what would I do like right now if I did have just a buy, if I had to go long on the Russell? How could I handle that? Well, let's get rid of all the indices and just select one. And then I'll go over here and I'm going to make this 55. Okay, and see if we got something else. So what I'd be more inclined to do would be to buy, say, like the 72.50 and then like sell it for 90. Now, personally, I prefer to buy like at 60. Okay? I like buying at 60. And with only 20 minutes left to go, it's sort of a dangerous trade. So the actual trade, if I'm buying right now on the Russell, okay, I'd be looking at the 961.50 for $60. And why do I do that? I've been talking about this strategy a lot lately on some of the different webinars and all that stuff and the radio show. Well, I can go in. I have hour and a half left till expiration if I am placing this trade. And I'm looking at all the other indices. You got several indices pushing higher, and all that doesn't really matter though. What I'm really talking about is the price point. So it's slightly in the money. Okay, $57, $58 right now. If I buy that binary somewhere between 55 and say 65, but ideally right around $60, I'm going to sell it at 80. I'm just trying to make $20. So if I buy it at 57, I'll sell it at 77. Okay, just trying to make $20 on a slight move and a little bit of time decay in my favor because it's already above 961.5. Just by a few ticks, but it is above it. So if I grab that trade, the market will move up, maybe a point, maybe 2 points at most. I'll be able to get out of the trade for $77. So, not a bad trade at all, just a 2-point move required. And I even have a little simulator on here to sort of show you, what happens if, we can even do this on both sides. It's pretty cool. You can go in and say, what happens if it moves 2 points? And hit apply, then OK, and then it'll actually do the calculations for us. It says on an exact 2-point move from where the market is right now, it's moved down some, but it'll be worth 80.50. So not too bad, right? That's what I want to get out at 75. So it actually says with a 2-point up move right now, this trade that I could buy for around 65, I could get out of for 80.50. And it's already went up in value a little bit. We were looking at it at 57. And the market's moved down. How has it went up in value? It's pretty simple. Time has passed. So time is in my favor. Okay? And so you go in there, you put that in, then set your take profit in for, say, $80 on the trade if you're already in the trade. Now, here's the big key on doing these trades. And I like that 960.5 better, by the way. The key on these trades right here is that you can go in, take profit, but you want to do them like an hour and a half to like an hour, maybe 45 minutes at most, before expiration. So if you're doing these whole $60 trades that we're talking about right now, and you want to get out of them when you've made $20, okay? And the reason is there's a lot of premium pumped in right now because you have so much time left till expiration. So they move a little slower. They're not going to hurt you as bad with a little movement. And so you go and you grab that $20. If it goes against you, then you can get out immediately. I usually wait till about 30 minutes before expiration, okay? If I haven't taken my profit, then I'm looking to get out right around either break even or $40 on the trade. And so it's just a quick way to hop in and just scalp the market for a couple points over and over and over again and just grab those profits. Now, I can also do it on the flip side. Let's say you think the Russell's going down, okay? Like I actually have a bearish tendency right now on my charts. The way I set my charts up, I think the market's going to drop a little bit, in the short term. So on the Russell. And so if I think if that's how I'm looking at the market right now, and that's what I think is going to happen, I'm going to sell it 40. Okay? So if we think the market's going up, we're buying at 60, getting out at 80. 30 minutes before, we're looking to get out at $40 or higher, basically take a $20 loss, or no loss, ideally, if we get out at break even. We're not holding this thing all the way till expiration, okay? But on the sell side, I'm going to sell like somewhere around $40, and then I'm going to buy back at 20, okay? And so if it's at 43, I may actually put my sell in at 40 and just let a little oscillation hopefully fill me, because I want to get filled at $40. I don't want to get filled at 43 because I want to make 20. I want to sell at 40. I want to buy back at 20. And I want to do that somewhere between an hour and a half to 45 minutes before expiration. And then when the market, goes up, then what can I do? Then, if it goes up against me and I only have 30 minutes left till expiration, I'm going to look to either get out at break even or add like around a $20 loss. So that means buy it back around $60. Okay, so really it is a pretty, simple trade. And just to, show you an example, I'll go ahead. I'll put this one on. We'll open it up. We can get into it right now for about $40. I'll grab 40.50. I'll take that. So we'll grab that, put that trade on there. Okay, we're in the trade. Now we're immediately going to flip it around, and I'm going to say I want to buy it back at 20. Okay, and then I'll put that order in to now buy back at $20. So if I sold at 40, I buy back at 20, I make $20. Now I want to get my stop loss ready. So just in case this thing goes against me and I only have 30 minutes left till expiration, then I'll put a buyback and I'll set it like somewhere around 60, 65. Every order I put in on Nadex is a limit order. That means at this price or better. Okay, or better is the key. So if I put it in at 65 and it's at 60, then they're going to fill me at 60. They're going to fill me at the best price. I put in an order this morning. I got filled like a couple of dollars better, a couple points better on the trade. Simply because the market, moved a little bit. Like I didn't even see it on the screen. It moved so fast, but it moved down a little bit, and I actually got a better price, and it came back up. So it's a limit is at this price or better, meaning they're going to give you the best quote for the quantity that's available for the contract that you put in. And I do want to keep that up there. I want to be ready. I may have to take a hit on the trade of $20, but I, made 20, risking 20, or I could make 20, lose 20. That's not a bad trade. But it's a really simple trade to do, and again, it's putting time on your side. I do trades like this every day where I go in for around $57, and now a lot of those I'll hold till the end of the day, depending upon what kind of seasonality I got, what kind of statistics I got, or I'll get out at 96, which I know each time I'll get out at 96. But this is more of a scalping mechanism where I'm looking to get in, get out, get in, get out, and again I want that hour and a half till expiration, and I'm going to give it about 30 minutes. If it doesn't hit what I want in that 30-minute period, then I'm going to bail on the trade. So, I'll give it a little time, let it do its thing, but, I don't have to hold it to the, bitter end and let that happen. So, and then I'll keep this ticket up somewhere over here where I can take care of it and, just so I want to have it available. That's why I like that out-of-ticket feature that you get to use over here using the scanner. You can also do it in Nadex, which you got to manually go to an arrow, do out-of-ticket. And I don't know if you noticed this, but I didn't click on another ticket to set my take profit, to do anything. I literally just the entire time I used the exact same ticket. And I'll go through. I'll show you how I did that again, right here. Let's see if am I logged into demo or just live. Let's see here. It'll pop up. It'll tell me here in a second. If I'm not. Yes, I'm not. There we go. I got that. So let's see. If I'm going to do the same ticket, I'm trying to figure out where it's opening it up at. And I pop that ticket open on the demo platform. Okay, so if we go to small cap, we go to the 3 o'clocks on the small cap binaries. Okay. So indices binaries, small cap, 3 o'clock, and I was looking at the 961.5. Okay, the tear-off ticket for that, which is I'm accessing that through the scanner. And I go in and let's say I place this trade to sell it. So I want to walk through this to sort of see how I'm doing this. So sell, we'll say I sell this trade right here. Now I want to put my take profit. I don't have to go open another ticket. I can do it from the exact same tear-off ticket. I just click the buy side. Click buy, make sure it says the word buy. I sold, so obviously I need to buy it back to close. And then what price do I want to buy back? Well, I want to buy back lower than I sold. I want to buy back at 20. So then I'll place order in right there. And now I have that, and now I want to get my, my stop loss trade potentially ready. So I go buy, and I put this up here, like it say 65. And then I just move this up. Now, I'm not going to get out just because it hit 65, because the thing is, during this hour and a half, up to that last half hour, it really moves slow. All right? And so I'm using that fact that it will move sort of slow in my favor, because it may go up, and maybe it'll hit 65, 70, 80, but then it'll trend back down a little bit, And a lot of times I can get out of the trade for break even, or I get out of the trade for, like just a $20 hit. But I'm really not looking to get out of the trade at all until the last 30 minutes. So I'm going to let it do its thing and fluctuate until that final 30 minutes on the trade. And have my stop loss order ready. And so in that last 30 minutes comes, then I'm going to go in and say, hey, buy the thing back at 60. Now, a very important thing is if you go in and you put a take profit order in, okay, and you do take a stop loss, you need to go close the working pending take profit. Don't forget to close your working pending take profit order, okay? That's an easy mistake to make. Sometimes it'll work out in your favor to go down, hit it, come back up, and it'll work, but more often than not, probably not the best idea. So you don't want to have, a working order out there that you don't want anymore. And so since it's not automatically OCO, even though I'm working on an OCO plugin, so it's not automatically OCO. OCO means one cancels the other. Like if I take a stop, then cancel my take profit, or if I take a profit, then cancel my stop, trailing stop or stop loss. You need to remember, hey, if I have two tickets open on the same thing, I need to cancel the other one out. I am the OCO. I'm the one cancels other. And that should help you manage that trade a little more effectively. All right, well, we got the gold trade on, made $75 on that one. Or, sorry, what was that? The silver trade, $75 on that. We got the gold trade. Somebody took those from me. They got $5 on like 10 of those. And, made an easy, $50 on that. We got this trade on. We're looking for $20 on it. So, pretty simple, potential trade. And let's see here. What else can we check out? Let's go ahead. Let's just analyze some of the other markets right now. By the way, on the 10-minute deviation stop method, check out how we went up, trailing up our stops. And, we sort of had a lot of oscillation between 0.5 and 0.7. We never even closed above the 0.7. We did close above the 0.5. Once we did come back down and hit that stop right there, we just got chopped. It came down, it went up a little bit, came back down to settlement, filled in the gap. The gaps have been filling like day after day lately, so I'm going to have to start hopping back in on those again. Talked about that yesterday. Let's go ahead and hop on over. Let's look at the Dow. So on the Dow's looking like it has a little more oomph to it, a little more strength going on right there, 0.7 deviation level. But at the same time, remember our whole method, right? Now the strongest one is the 1. When we hit that 1, okay, is 1 deviation, settlement to 1 deviation right here. You can get this inside with the box spread scanner. 159 tick, 207. We passed 159 ticks a while back. Right down. Right. So that was actually a full 1 deviation from low to high. We already hit the 1 deviation. All right. We'll talk about a little bit more when we get back from this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. Used only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletter. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stock watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just sort of looking at the market, seeing where they're going and what they're doing. And one thing I want to point out was over on the Dow, is it hit that one deviation a lot earlier than it may look like it hit it. It hit it when it just passed 0.5. And though we had the one deviation level, and that is going to be a strong, that'll be a strong, pivot type level at 14,852. You out a lot. Also can help you trail that stop a little sooner. Sometimes when you're stuck right in the middle. Now in this case we would have been able to trail it anyway because it passed the 0.5. But sometimes you'll find you can trail it even sooner, like in the middle of a couple levels, just by looking at those half deviations, sort of manually plotting a half deviation or one deviation from the low to the high. And on the screen, they're on TFNN. We actually show you what the deviations are, okay? And points, a full deviation is 162 to be exact. So I'm just sort of eyeballing it right there for 159. But it's 162 points exactly. It's a one deviation move on the Dow. And just, like I said, that one deviation line can be super impactful. But let's go in. Let's do what I just talked about, okay? Okay. So at this point, we're expecting choppiness because watch this. When we close above the level, and I think that's going to be right there, what is that? Deviation. Right there. Then it gets smacked. Okay, about an hour later. 25. So we got stopped out right here. And what do we expect after that gets hit? We expect flat to choppy. Now we got a nice little move. We could have moved up right here when it closed above this level. Would have got out right away. And just chop. So really nothing happening all day. Let's go ahead and check. Now you can trade this flat market. You can butterfly this thing all day long. So it looks like a big moving day, but when you go in and look at this right here, really it's not that massive. It's just up and down right here. Like a middle line right there about 28.85. We're sort of sitting in the middle. Fly you like. Well, how do you find butterflies? Well, let's go in. choose your market. So we'll just, for instance, we'll choose NASDAQ for the moment. Put in 70, put in 95. You like the risk and the reward. And you might find like the 28.96 and the 28.72. So hopefully y'all got it.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now of the Forex or options trader or just getting into the markets. This report is a must, and it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is holding, there's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.